I'm going to get you started, and then I want you to finish it up. Assume that you sold 60 units. So let's go through the story. Let me give you the story here, and I want you to try this on your own. Beginning inventory, you have 20 units in stock that cost $20 each. Total cost, 20 times 20 is $400. Then on February 1st, the company purchased 30 units costing $30 each. So this is a little different from the cans of soda, because the cans of soda are 1, 2, 3, 4, 5, 6. Just 6 cans of soda, each one with its different costs. This is a little more realistic because now you're buying full orders. You're buying lots, 20 units, 30 units, 40 units, and things like that. So February 1st, you purchased 30 units at $30 a unit, so total cost was $900. And then on March 1st, you purchased 40 units at $40 a unit, total cost is $1,600. So your total goods available for sale is $2,900. And of these, you sold $60. 60 units, I'm sorry. So cost of goods sold, I'll get you started on this. Let's assume you were using FIFO. FIFO, cost of goods sold, which 30 units did you sell? Excuse me, which 60 units did you sell under FIFO? The first units that you sold were the beginning inventory. So you sold 20 units at $20 equals $400. Then which ones did you sell? Then you sold 30 units. Oh man, what is this thing doing? Then you sold 30 units at $30, $900. And then which ones did you sell? That's 50 units so far. We sold a total of 60 units. So where did the other 10 units come from? The 10 units came from March 1st. So those units cost how much? $40. So that would be a total of $400. And therefore the total cost would be $1,700. That would be the total of those three columns. 400 plus 900 plus 400 is $1,700. So now figure out the remaining, or we could do ending inventory together. How many units are left? Under FIFO, how many units are left?
30 units.
30 units. And how much did they cost? $40 each, because they all come from the March 1st purchase. So that would be a total of $1,200. And that would be your ending inventory. Now try the same thing for LIFO. All right, so under LIFO, which unit did you sell first? March 1st. So how many units did you sell from the March 1st purchase? 40 units at $40 each, right? Would be $1,600. Then which ones did you sell next? February 1st. How many of the February 1st units did you sell? 20 units. $30 each equals $600. So your total cost of goods sold would be equal to $2,200. And what would your ending inventory be equal to? Well, which units are still here? You still have 20 units. You still have your oldest units. How many units do you have left, by the way? You have 30 units left. So we have 20 units at $20 each equals $400. And then I have 10 units left from the February 1st purchase. Equals $300. So cost of ending inventory $700. Total cost. It's very interesting. Cost of goods available for sale, we said, is $2,900. This is how you can check your work. If you're a maniac like me and you like to always check your work, you could check your work by adding cost of goods sold and ending inventory, and it should be equal to goods available for sale, 2,900. So 1,700 plus 1,200 is 2,900. 2,200 plus 700 is 2,900. Because this is all about how you can allocate your cost. The total cost is still the same. Again, this is inflation. So which reports the greatest amount of cost of goods sold? FIFO. Which one allocates higher, more recent costs to the balance sheet in inventory? The higher costs here are going in FIFO. Wait, I got this wrong. I'm sorry. Why didn't you all correct me? LIFO. The higher costs go to, under FIFO, go to the balance sheet. Because look here, inventory under FIFO is 1,200. Here, inventory under LIFO is 700. So which units were really sold? The first ones, right? So according to FIFO, they're the units. They're the units according to FIFO. And you know what I'll do is I'll make this in blue. This is what we sold. Right here. Because we always manage our inventory using FIFO. You want me to make this more interesting? Look at LIFO for a second, right? Does anyone see a problem here with this? What if this assumes that all your customers didn't start buying merchandise until after you made your second purchase, right? Because under this, right, we said first you sold these units, then you sold these units, and then you sold these units, right? But what if a customer came in on February 15th? Which units did they buy? Under LIFO, which units? Someone walks in the store February 15th. They bought the February 1st units, right? So we're assuming that people didn't buy the units until the end of the year. But LIFO is really messed up like that. It's just not reality, because that's not how you move the inventory. Assume the 60 units in Q1 sold for $100 each, and operating expenses total $3,500. Use FIFO and LIFO to complete the following income statements. So for example, I'll get you started here. We sold 60 units, right? So the total cost here would be $6,000. How did I get that? That is 60 at $100. Okay, now you figure out the rest of this chart based on the information that we already calculated. I think everybody's here except Sarah. No, and Harvey. Is anyone following the World Cup? I don't have a TV, so I can't. Is it on? It's on the internet also.
Yeah.
When does the U.S. play Ghana?
6
At 6 o'clock tonight.
Yeah.
I went to a World Cup game.
How was it?
And it was in the U.S.
Supposedly we might get it for 2020 for 20.
It was like you ever watch a comedian in a speaking in a foreign language when you don't get any of the jokes?
Wow.
That's kind of like what it was. It was like being on another planet. Like we just had no idea what was going on. We went to the Cotton Bowl in Dallas and we saw the Netherlands play Brazil. And you've really never lived until you've been to Brazil, seen Brazil play soccer or football, whatever they want to call it. And we were like, we were probably the only Americans there. You can't imagine a stadium full of people, and we were the only Americans. But we just, it was World Cup quarterfinals. You can't miss something like that. So we saw this game, and it was very exciting. It was a very enlightening experience. But it was because they had the World Cup in the United States. When was it? 2004, 2008?
2010. No.
No, it was in the 1990s because that's when I was in school. So it's probably 1994. Yeah, 1994. So and and like it was kind of cool because Brazilians look different from Netherlands people, Dutch people, and like you could see like just the entire stadium was just full of Brazilians and Dutch people and us. Us four people, us four Americans that drove up from Boston. And it was really good though. Even though we had no idea what was going on. It's interesting if you watch, because we had never like watched soccer before. And we didn't even know like what to watch for. Clueless Americans that we were. Okay, so what's cost of goods sold under FIFO? We already said it's 1,700. So therefore your gross profit would be 4,300. Oh, and I just recorded that whole conversation on tape. Very nice. 4,300. So 4,300 minus 3,500 is, we don't need that, is 800. Under LIFO, what's your sales revenue? It's still 6,000. Your sales revenue is going to be the same. So is the World Cup on the internet also? Can you watch it on there?
Yeah.
On ESPN.com for free? What's cost of goods sold for LIFO? 2,200. And therefore, what's gross profit? 3,800. Minus operating expense of 3,500 gives you operating income of, I don't know what it just did, 300. So look at the difference. Let's answer these questions. FIFO allocates and I want you to think about the answer for a second and then we'll compare them. FIFO allocates which cost to cost of goods sold? The most recent or older? It allocates the older cost to cost of goods sold, which results in lower cost of goods sold and higher operating income. LIFO allocates which cost to cost of goods sold? The recent costs, which results in higher cost of goods sold and lower operating income. So which one of these income statements would you want to show to the IRS? LIFO. Which one results in less income tax expense? LIFO. And international financial reporting standards allow which one? FIFO, but they do not allow LIFO, because LIFO is not reflective of reality. The only reason why the U.S. allows LIFO is because the IRS allows it. And don't take away our tax benefits.